Hey investors, this is Bill Carney with Asset Rover. We're going to show you how to save time tracking rental property expenses along with your rent and other income. Well, it's been almost a month since we finished our taxes this year, and if you didn't have a good way to organize your finances, it was one of the worst days of your life. If you are on top of things, you found a way to do it via paper, basic spreadsheet, or maybe even an accounting or personal finance tool with software you may have downloaded or accessed online. So why would we track expenses anyway? There's really two main reasons why we track rental property expenses. Number one is taxes, and then number two is just for budget purposes. How should you track expenses on your computer? You have three different options out there that are some of the leaders in personal finance. Quicken being one of them. Also you have Mint, and you have QuickBooks. Now at one point you could have used Microsoft Money, but since that is now discontinued, you aren't left with that option anymore. So let's compare the three side by side. Quicken is comprehensive software that is good for small businesses, for your own personal finance, and more recently, rental property management. Mint is an online personal finance solution. It's free, it has good automation, it links to all of your bank accounts seamlessly, except it really is limited to personal finance. The third one is QuickBooks. That's a powerful, full-featured small business accounting tool, and it's very scalable. The only issue we see with that is it may be a little too much for new investors just starting out with maybe only a few rental properties. So we still feel that the desktop solution is the way to go for tracking your expenses and your income from rental properties at this time. Now here at Asset Rover, we don't have any affiliation with Quicken or anything like that. We're not receiving any endorsements from the company. I just offer this suggestion solely because it is extremely helpful to me and many others out there who do real estate investing and need to track their income and expenses. Truthfully, any financial tracking software will work if you use it and you keep up with it. Quicken has been around for many years, so it has had a lot of time to develop into the full-featured program that it currently is. Quicken's Rental Property Manager. It's easy to use and it's designed for real estate investing businesses. One thing we like about it is that you can set up an unlimited number of properties via tags. So what we'll show you in this video is we'll show you how to track income and expenses in Quicken. We'll show you how to tag income and expenses for each property, and we'll also show you how to set up your rental property and a mortgage if applicable. Okay, so here's Quicken 2014 Rental Property Manager. There is a version of 2015 out there, but we'll go ahead and show you 2014 because that's the version we're currently using. What we'll do is we'll go ahead and enter in a new expense. Let's just put 1001 as a dummy entry for a check number. And now we will just go in and select our payee. Let's just say Jim's Cleaners, for example. Let's say that we had to get some cleaning done on our new rental property that we just purchased. So now you can select the category that you want to assign this to. You can see that there's a number of different options under rental property expenses. So let's go ahead and just select cleaning and maintenance. Now here's the magic part with the Rental Property Manager. So what you can do here is you can tag the property and then assign all income and expenses to that particular property. Let's set up a new tag and we'll call it Property 1. And then we'll go ahead and hit OK. Let's just say it's a payment of $50. Then we can go ahead and either click Save or just hit Enter. And then we'll go down to the next line in the register. Let's enter in another expense. We'll do check 1002 for example. And let's just set up a mortgage payment here for Wells Fargo Bank. We'll have categories again and a whole list of rental property expenses. So what we'll see here is that we don't have any expense categories for mortgages. Well, the nice thing about Quicken is we can just go ahead and add the category that we want here. Now we're actually going to go back later and set up a mortgage for the property, but I did want to show you at least this feature for now. So let's set up a category called mortgage. What you'll notice here in this drop down that you can make this a subcategory of another main category if you would like. In this case, none of the main categories fit for what we need to do for a mortgage. So we'll just go ahead and just create this as a completely new category for now, so you can see how to create an entirely new expense in a new category. We'll go ahead and label this property 1 so it stays under the same exact property listing. As an example, let's just say $500 for a payment here. Well, let's throw a rent in here while we're at it. We'll do a deposit, DEP. Let's say Jane tenant paid us. We'll say monthly rent received is a memo. And you'll see that in the rental property income, there is a rents received. Let's tag it property 1 again. And let's give ourselves a nice $1,000 deposit. Alright, now we have income coming in for our property and a couple of expenses, for example. Now what I want to show you is how this can be used for tax benefits. Go into your category and look at all of your categories on a list. If you go down and say show full list, you can see the entire list of categories under rental property expenses. Look to the right and notice how they all say Schedule E for your tax form. You can see that the rental property income is in the same way. So, Schedule E, this is a form from the IRS. If we just slide through here and check out this form, you'll see down here that we have all the expenses from line 3 all the way down to line 19. Line 19 being reserved for other if you happen to have that. All of those match perfectly with Quicken, so that means if you set everything up correctly in the right categories, it will be very easy for you to export this, give it to your accountant, and have that form filled out automatically for you. Okay, now it's time to add an asset account for your house. Once you do this, you'll be able to set your house up, and you'll also be able to set up the mortgage later. As a nickname, we'll call it P1, and then also put the address after it. This lets you look at each individual rental property that you have and look at it as P1, P2, P3, and so on. As you set this account up, you'll be able to choose if it's a personal, business, or rental property transaction. Since we're just tracking our rental properties right now, let's pick rental property transactions. Now you can choose when you pick the house up. Let's just select 5/1 of 2015. You can enter the purchase price, which we'll just put $100,000 for now. And then we'll also estimate, let's just say $100,000 to make things simpler. Hopefully your purchase price will be less than what it's worth. Now, is there a mortgage on this house? This is where you can actually pick if you have a mortgage and also select the bank that you have a mortgage with. Now you can make the loan the same name if you want, but we like to make it something different. So now the details will be P1 mortgage. Now you can look on your balance sheet and see which one is the mortgage and which one is your property without having to do a whole lot of thought. We'll select loan type mortgage. Opening date will say May 1st of 2015. Now usually when you have a 20 or a 25% down payment, chances are that your opening balance may be $80,000 or $75,000. We'll just make the numbers easier by putting $100,000 in here. You can also set up a loan payment reminder if you would like, to make sure that every month you at least have a reminder that tells you, hey, go ahead and pay your mortgage. If you have bill pay, you might even be able to set Quicken up to have it pay the mortgage automatically for you. But most banks have automatic deductions from your checking account. Okay, so now that you've added your mortgage, it'll ask you if you want to link this to one of your properties. Go ahead and just select the property that we set up already on 742 Evergreen Terrace. Now it's linked, and now your account has been added. Now what you'll see here in the main screen is that you'll have bill and income reminders. What you'll see, the bill and income reminders, you can right click and you can select 30, 60, 90 days, or you can show no reminders at all. What's nice here is you can see the reminders that we set up for the P1 mortgage. So how about that? It actually comes up and tells us about reminders that we can do in the register itself. If you go up to the upper right hand corner and click on the blue clock, you'll see that you can set up reminders within your account register. So now that we see that the mortgage payment is actually scheduled for June, and that's our first mortgage payment, let's just go ahead and delete out that dummy entry we had for the mortgage. And then what we'll do is once the mortgage becomes due on June 1st, it will automatically send us a reminder, accept the transaction, and put it into our checking register. Now let's go into the future transaction and see what Quicken already automatically did for us. It went and set this up as a split transaction, which means it will split the mortgage and the interest and allow you to look at both of those, and then the interest will get recorded under the interest category, and then the actual mortgage itself, the principal, it will deduct your P1 mortgage balance. Okay, let's turn off our reminders within the register. Now, another nice thing is you can actually go into the P1 mortgage itself and see how much you owe on the property. Now you'll see that we can show a whole year's worth of mortgage payments in the future. Now that doesn't look too good for us because where's our income? All we see now is a whole slew of mortgage payments that will certainly drive us into the red as shown here. Don't worry about that because we can also add reminders for income and the deposits that we receive. This is going to help us forecast into the future what our balance will look like in the checking account. So you just right click and pick income reminder and it'll all be filled out automatically for you. You can double check and make sure it's set up on the day of the month that you prefer. In this example, of course, we'll set 6/1 as the next due date. We don't want to do it now. We've already entered one for this month in May. All right, so there we go. Now we have all of the income and all of the expenses, at least the mortgage payment and the monthly rent income monthly. We'll go ahead and clear that away. Now, one nice thing, of course, is now that you're doing all of these tags, you're able to do reports on your income and expenses for each property. You can see here in our itemized tags for year to date, there's the income and there's the expense for property 1. Let's make this interesting now and let's go ahead and enter more income and more expenses for a second property. Let's throw our buddy Jim's Cleaners back in again now. We'll do a new check number and now we'll tag this as property 2. Let's get some income in for this second property as well. Now we'll have a new tenant. We'll have Joe tenant come in here and we'll put a similar memo in here. And let's go to our rental property income and pick rents received again. And now we'll tag it property 2. We'll do another $1,000 deposit in this case. Now let's go back to our Schedule E report and check this out now. You get to see everything in that Schedule E in a list in your report. We have it set up in tags so you can see each property. You can also go into itemized tags and look at your year-to-date expenses there and see how the income and expenses are set up and broken out per property. That's going to go perfectly into your Schedule E where you have A, B, and C for property 1, 2, and 3. You can sort these any way you like. So let us know what you think. How do you save time tracking rental property expenses? Do you even track your income and expenses? Do you do it in the old paper format? Or have you graduated to software like Quicken or maybe something else online that at least gets you some of the basic income and expense tracking? Do you have any tips that might make tax time low maintenance and simple? Or is it just a total nightmare for you? Please go ahead and leave us a comment below. This is Bill from Asset Rover, hoping you have a great day.